Hey everyone, welcome to today's live stream. I'm Ambrose and I'm excited to have you all here with me. It's the Octa live trading session. Now we've got an action-packed session ahead, where we'll dive deep into the world of trading, and I'm going to guide you step by step on a lot of things, right? On the Forex markets, your journey, and how you can craft a winning trading plan, spot those profitable opportunities in the market and manage your risk like a pro. I also share some strategies on how to pick and balance your assets for long-term success. We'll talk about strategies, the zone trading strategy that I use, look at the economic calendar, and a lot of other amazing stuff. So whether you're just starting, a beginner in the Forex market, or you're already on your trading journey, or you're an advanced trader, regardless of your level of trading experience, there's something for everybody today. So let's get into it. Now, before I go over the content of today's session, today's live trading session, if you can hear me clearly, you can let me know your name and where you're joining me from in the chat. You can go ahead and let me know your name and where you join me from in the chat. And if this is the first time taking part in an Octa live trading session, you can also let me know in the chat. So in live trading sessions like this, what we do is we teach you on how you can analyze the market, some of the ways that you can analyze the market, and also look at the news, some of the steps to opening an order in real time. They're also pending orders, but we'll talk about all of that. Quick disclaimer, guys: any opinion, news, research, prices, analysis, or other information discussed in this training or linked to this presentation is provided as general market commentary and does not constitute investment advice. Quick introduction about myself. My name is Ambrose Ebuka. I have 5 years of trading experience, and I've honed and designed my trading proficiency to contrive various strategies that includes swing trading and scalp trading as well, which is, the day trading and scalp trading as well. I also analyze and trade gold, GBP, and GBPUSD charts with an outstanding accuracy exceeding 85%, and I regularly backtest these strategies for effectiveness. Terence, welcome from Nepal. Kizito from Uganda. Super amazing to have you guys on here today. It's going to be an amazing session, guys. So for the agenda, the things that we have today, we're going to check the economic calendar, look at the amazing Octa economic calendar, look at some of the economic events that we have today, and potentially for the rest of the week, because we have other important events coming in for the rest of this week. And I would also introduce you guys to the ZAP zone strategy. If you don't know, that's the strategy that I use to trade. I'm a zone trader, and if you're familiar with these markets, you would know that the market changes from supply to demand and consolidation. That's basically a brief way to describe the movement of the market. So if you're able to tap into these zones, then you'll be more comfortable to place trades that will be potentially profitable. We're going to look at the DXY, which is the dollar index. I'll explain what it means and why it's important for you as a trader as well. And we'll also look at some of the pairs that are correlated with the dollar index, which is the dollar. Again, we're going to look at how the strength or weakness of the dollar index would influence these other pairs. This session will last for 45 minutes. And if you have any questions at any point in time, I'm always checking the comments to see if you guys have any questions. So if you have any questions at any point in time, you can always ask your questions in the chat. Hi, Muyuwa. Thank you for joining today. If you have any questions, go ahead and ask in the chat. When we get to the end of the session, we're going to have a Q&A session where I'll answer your questions. And, if I'm feeling good, I'll also ask you some questions. So stick around and pay good attention so you don't miss out on the information for today. Again, use the YouTube chat to ask your questions during the webinar. I'll periodically check it and answer them all. Now, just a brief introduction to the strategy that I'll be using. And it's very important because while I'm explaining and talking about, trends and higher highs and higher lows and the change in the market structure and some of the key levels, I don't want you guys to get confused. I don't want you guys to find it difficult to understand the strategy. So this is important, that I explain how the strategy works, in theory before I go into the practical version, so that when you just combine the theoretical aspect of what you've learned to the practical, then it makes a lot of sense. And that's the way Forex works. That's the way the educational process of Forex works. If you're able to understand the theory, the definition, this is what NFP is, this is what CPI is. When it comes out in play, all you have to do is to apply that theory into practice, right? And then you see it play out well for you. All right, guys, since we have everybody here, thank you all for joining. We're going to get right into the strategy, and I'll go ahead and explain what it means and how it works, and also very important when to use it. So this strategy is the zone trading strategy, or the ZAP zone strategy that I like to call it. And what it basically involves is identifying specific price zones on a chart where the price is likely to react or reverse. You know, when I go to the chart, I'll show you guys. And one of the things you would notice is that the market kind of moves like a magnet. You know, the areas where the highs and the lows that were created on the left side would most likely be respected when the market is making a reversal or a continuation in future. And these zones are typically based on historical support and resistance levels, Fibonacci retracements, trend lines, or other technical indicators like the moving average that I also use. And the concept of this strategy is to focus on opportunities within these predefined zones, rather than trying to predict price movements, you know, outside of them. Now, what does this strategy consist of? Understanding market structure, right? I always like to tell traders the first thing you want to do is to check the economic calendar. And this is very important because you don't want to be the trader that comes into the chart and while you're trading, probably making a profit, you know, the governor of the Bank of England or the central bank, the Federal Reserve, you know, comes out and says something, and you know the price reverses, or you know you just find yourself back at break even. You don't want to be the trader that sees a profit and then the profit turns into a loss, right? And one of the ways you want to do that is to make sure you're well aware of the events, the economic events of that day, which is by using the Octa economic calendar. After this introduction to the strategy, I'll show you guys exactly how to use the Octa economic calendar and you know prepare yourself for volatility for the day. So after the economic calendar, what you want to do is you want to understand the market structure. Now, by understanding market structure, it's basically like you're coming to the market, and at first glance, you're able to understand if you're in a trending market or you're in a ranging market. Now, if you have that difficulty, you know, coming into the market and you don't know if you're in a trending market, or like you're not able to understand, and you're finding it difficult to understand what's going on in the market, that's totally fine. You know, every successful trader was once in that position where they did not understand the market, but that's more reason why it's important that you stick around to the end of this session, so you're able to understand how the market changes from supply to demand levels, and how the market moves from trends to ranges and also goes back to trends, and just basically understand the market structure. Now, to be able to understand market structure, you need to understand how the candlestick chart works. If you want to use patterns, if you want to use supply and demand zones, your trends, your ranges, these are the things that would help you understand market structure. You should be able to come into the charts and look at the charts and say we are in a trending market or we are in a ranging market. And obviously, you want to, the market provides opportunities regardless of how it moves, but you'll be more comfortable to trade in a trending market, in a market that is trending, it's moving, right? The second thing you want to do is to identify the key levels. Now, when you understand that this market is a trending market or a ranging market, you identify the key level. What are the important levels that the market would respect if it's trending back on the way down or if it's continuing to the upside? What are these key levels? These key levels, you can use your trend lines to identify them, your moving average as well, your Fibonacci, support and resistance. These are the things that I would be using when I go over to the charts and show you guys exactly how to analyze. So we check and spot these key levels, and then you want to predetermine your entry and exit points. Now, this is an important part for this strategy because most traders just get in and get out, right? Especially the scalpers, they just come into the market, no analysis, just buy, sell, you know, allow the profit or the financial result or how much they're making to determine if they should close the trade or not. But by predetermining your entry and exit point, now you're able to spot, this is where I want to get into this trade. This is my preferred price. This is where I'm comfortable with buying. And it's a good thing we have pending orders with Octa Trader for that. You know, if the market is not at that price, you can always put a pending order so that whenever it gets there, it executes. And your exit point as well should include not just your take profits, but also where you want to exit at risk, which is going to be your stop loss. And you apply proper risk management, which has to do with your risk to reward, your conservative use of lot size. These are the things that are included in the strategy, right? Included in the framework. And by doing all this, by following this step, you're not just able to understand the market and place good trades, but you're also able to eliminate the emotional aspect of trading where you have to overtrade or make rash decisions, because now you already identify where you want to enter, where you want to exit, how much you're risking. Those things have taken away, the rash decisions of trading and the emotional stress that can come with placing the wrong trades. Let me know in the chat if you guys understand what the strategy consists of. Let me know in the chat. Now, what kind of trader is this strategy suitable for? As you can see, all type of traders: day traders, swing traders, scalpers, and position traders. Now, it's important that if you're going to be trading the Forex market, you know the kind of trader you are. The kind of trader you are can also help you know what pairs you should trade and what time you should trade and how much time you should devote to the market, right? It's very important. And while you're trying to figure out what kind of trader you are, if you want to align with your trading style faster, what you can do is to focus more on the trading styles that align with your personality, right? So if you're an impatient person, obviously scalp trading would work for you. It's going to be difficult for you to adopt swing trading strategies if you're impatient, because you're naturally impatient. So imagine trying to hold a trade for weeks and months. It might cause you to make rash decisions, right? So you can start with a trading style that fits your personality. The day traders are the kind of traders that open and close their trades within the day. They look to open and close their trades within the day. They don't want to stay longer than 1 day on the chart. They don't want to have their trades open, rather, longer than 1 day on the chart, right? The swing traders, days, even weeks, trades are running. They're looking at the long-term possibilities and opportunities in the market. The scalpers get in and get out within minutes. They just want to come in, capitalize and scalp and get out of the markets within minutes. And position traders look to trade for a longer term, months, even years, keep their positions open for a longer term. Now, regardless of whichever style, it doesn't mean you can combine two strategies. It doesn't mean that you can. And that's the good thing about the zone trading strategy, because in all time frames, regardless of your style, you must find a zone. You must find a supply zone. You must find a demand zone. If you go to the 4-hour time frame, there's a supply zone, there's a demand zone. If you go to the 5 minutes, 2 minutes, there's a supply and demand zone. So regardless of a trading style, you can always adopt to using the zone trading strategy. All right, I see you guys are on board. Are you guys are following the explanation? All right. When do you use it? When do you use this strategy? During volatile sessions. By volatile sessions, again, I didn't say during high volatility, during volatile sessions. So we're kind of streamlining this now to trading times and sessions, right? And we have New York, London, Tokyo session. And a volatile session is basically an overlapping session, right? When two sessions are open or on at the same time, like the New York and the London session by 5 p.m. would be on, 2 p.m. would be on at the same time, So that's a session that you can capitalize on, because there'll be volatility at that time. And as traders, we need volatility. We need the market to move. If the market doesn't move, if there's no volatility in the market and the market doesn't move, traders would not make money, right? And also after major news events. Why? Because usually after major news events, there's volatility, and you get to see if the market is going to continue its original trend or if you're going to get a reversal to the downside. So these are some of the importance of the strategy, the kind of traders it's for, and when you should use it. So let me know if you guys understand in the chat. Let me know if you guys understand in the chat. We're going to go over the economic calendar right now, the Octa economic calendar. I just want to show you guys, exactly how it works and how I go over the analysis process, or my process of analyzing the markets, so you guys can adopt that as well. And the first thing I like to do is to use the Octa economic calendar. Go over the economic calendar. I mean, I've already done this today, but I want to show you guys how to use it, how you can apply it to your trading, and so on. All right, so this is the Octa economic calendar. You can get this in the Octa official website under analysis and education, analytics, economic calendar, and then this information is shown for you. Now, if this is your first time seeing this economic calendar, basically what it does is it gives you reports on economic events, and these events are important because the economic calendar or the economic stability or instability of a country is a market driver. If the economy of a country is stable and is doing good, it's going to have a direct impact on the domestic currency of that country. So let's say, for example, the economic the economy in Nigeria is good, unemployment rate is low, inflation rate is low, and the economy is just generally doing good. What happens? The naira increases in value, right? The same thing goes for the dollar. If the economy is doing good and inflation is on a low, what happens? It's going to have a direct impact on the dollar, and you see the dollar begin to gain value. But how would you know? How would you know if the economy is doing great? With the economic calendar, most of these reports here, the interest rate decision, GDP, CPI, these are reports that help you gauge the strength or weakness of a country's economy, right? And that's basically what you're doing with fundamental analysis. You're using fundamental analysis to look at different countries and say, this one is stronger, the economy of this one is stronger, the economy of this one is weaker. I'm going to obviously buy the one that has a good and strong economy and sell the one that has a weaker economy. So that's just a basic and brief definition of how the economic calendar works generally. Now, if this is your first time, you're going to have to do some little settings and just so that you can be on track and not miss out on future events. And one of those settings would be the time zone. You have to make sure your time zone is in your current location, right? If you forget to do this, you'd miss out on these events because you'll be seeing it at a different time and you wouldn't know that, the event has already happened or is yet to happen, right? And that's one. Then the second thing you want to do is to include medium and low impact if you're a beginner trader. I like to stick to high impact events because, I go for economic events that would bring about high volatility to the Forex market. Now, how do you interpret these events? If you look at this information here, you'd see that there's a lot of numbers, there are numbers, high impact, the reports, the currency that's going to be affected, which is the Australian dollar for this trade balance month over month, and this is year over year, and then the time is going to be released. Now, one of the ways you can understand, this reports in a simple way would be to just click on it, and you can see that Octa has given you a definition of the trade balance, what it is, and most importantly, the influence is going to have on the Australian dollar, which is this last sentence you have here. If a steady demand in exchange for Australian exports is seen, that will turn into a positive growth in the trade balance, and that should be positive for the Australian dollars. Now, if you don't know what trade balance is, think of trade balance like your personal savings, right? If you sell more than you buy, you have a surplus, you have extra money. But if you buy more than you sell, then you have a deficit, right? And you owe money. With Australia sells things to other, that's what export is. They export things like coal, wine, iron ore, and they also import cars, electronics, and so on and so forth. Now, how does the trade balance work? Trade balance is basically exports minus imports, right? If you have a positive trade balance, it means that Australia exported more than it imported in the last month, as you can see, this month over month trade balance. And if you have a negative balance or a decline, it means Australia imported more than it exported in that past month. Okay? Again, a better than expected trade balance would mean Australia exported more than it imported, which would lead to a stronger Australian dollars, right? Because a surplus strengthens the Australian dollars. It means a lot of countries are buying more Australian goods and they're often using the Australian dollars. Now, a less or worse than expected trade balance, which is obviously what we have here, as you can see, we had previous at 5644, forecast 5.3 billion, and then actual 4.6 billion, right? This actually is less than the forecast and the previous, which is less than expected trade balance, and this can lead to a weaker Australian dollars. It's a deficit. It weakens the Australian dollars because Australia is spending more on imports and often in foreign currencies. All right. Now, again, when you understand exactly how the trade balance works, understand exactly how most of these reports work, it's easy. It's simple for you to know if this is going to be good for the currency or bad for the currency, and then you combine with your understanding of market structure, technical analysis to get the good price or the good place to execute your trade. It's all about understanding strength and weakness and the perfect price to execute your trades. That's what trading is, basically all about in terms of analysis. Okay, we have retail sales. I believe you guys know what retail sales is. Now, before I even talk about retail sales, let me know in the chat if you understand trade balance, how it works, and how it impacts, the Australian dollars. Let me know in the chat also if you understand retail sales. So as you can see, again, just go over the definition. The retail sales data released by Eurostat. This it measures the volume of retail sales in the Eurozone. It shows the performance of the retail sector in the short term, which accounts for around 5% of the total value added of Eurozone economies. And again, an important sentence in this paragraph would be the last one, which is a high reading. It just shows you the influence of the reports on the euro, right? A high reading is seen as bullish for the euro, while a low reading is seen as bearish. Now, if I show you the dollar chart, when I go over to the dollar chart, you see that we're getting a decline in dollar. I mean, we had an increase because of the election results, and now we're getting a decline. And I'll show you euro. We're seeing that the euro chart, euro USD chart is increasing in value. It's going up. This report plus the decline in the dollar is also a factor as to why, the euro is pushing up in the chart. But I'll show you guys all that. Let me know in the chat if you guys understand. Now, today, we have a series of, high impact events from the Bank of England, and these are important for traders, especially the ones that are focused on GBP pairs. The Bank of England's raised interest rate decision, voting patterns, the vote rates hike and cut, monetary policy reports. These are things that provide valuable insight into the Bank of England's outlook on inflation, economic stability, economic growth, and all that. And again, very important that you pay attention to reports like this, events like this, because at the end of the day, it helps you understand monetary policy stance by the central bank. In this case, it's going to be the Bank of England, and then you can get an idea of what's going to happen in the coming days. Like today, we had the Bank of England's Governor Bailey's speech, and during this speech, he was a bit cautious with the rate hike, and he was like, "We're going to get more data before we can make decisions on interest rate decisions or cut the rates or increase rates." And also, we have Fed monetary policy statements, interest rate decision, and FOMC press conference coming at 8. And this is a very significant report because Jerome Powell, this is actually the first time Jerome Powell, which is the governor of the central bank of the Federal Reserve, this is the first time he was speaking since the U.S. election, and that alone adds a whole new layer of importance to this event. In the past, when he speaks and when he gives decisions and provide his monetary policy stance, these things bring about volatility to the Forex market, and now it's also going to be another statement on how the Fed plans to tackle inflation, economic employment, unemployment, and economic growth moving forward. So his comments, the things that he say, would provide clues and give us an insight on how the Fed is responding to this change in government, and it can impact everything from currencies to commodities, equities, and even the Forex market at large. So there's a lot to unpack, in this event. It's coming at 8 p.m. for Nigerians. If you're in Nigeria, you can look out for this event at 8. There's a lot to unpack, whether you're actively trading or you're just keeping an eye on, the economic calendar. You have to understand, and it's important that you understand the potential impact of these decisions, of these speeches, and of these reports generally. We're going to go to the charts right now, and we can see how, for the ones that have come into play, the ones that have been released, we're going to see how they impacted currencies, and also how they would impact these currencies in the future. I'm starting to know more about the economic calendar. Thanks for the lessons. You're welcome. What we're going to do now is to do a combination of what we've understood from the technicals. We're going to combine that from the fundamentals, and we're going to combine that with what's going on in the charts and try to see, areas where we can get good trades or possible entries in the Forex market. Now we're going to start with the dollar index, right, which is the DXY. And again, guys, if you have any questions at any point in time, please ask your questions in the chat. We're going to have a section where I answer all your questions and, just try to make sure you understand everything that's going on here. Now, if you don't know what DXY is, the DXY, basically the US dollar index, it measures the value of the US dollar against a basket of 6 major foreign currencies: the Japanese yen, the euro, the Canadian dollar, the British pound, the Swiss franc, and the Swedish krona. Okay, so basically you're using the DXY to look at the strength or weakness of the dollar against these major currencies. So if you're trading GBPUSD, EURUSD, gold, AUDUSD, you obviously NZDUSD as well, you obviously want to look at the dollar index chart and kind of gauge what's going on, understand what's going on with the chart and the dollar index at large. And if we're looking at recent market structure right now, obviously I have all the key levels mapped out. I think I'll just go to the monthly time frame and do this from the top. For those of you that are starting to get familiar with the analysis. So last month we had a bullish run on the dollar index. Same thing for this month, but we're seeing a decline now. The market is beginning to settle after the election results, which is where we had this huge push to the top side, trying to make a retest at this previous high. Just going to extend this because I'm actually looking forward to that retest. But yeah, we made that huge push to the top side. This month we were still bullish because obviously we're trading above the opening price, and also we're trading around the highs of this previous monthly bullish candlestick. So we're still bullish in November. I'm going to go to the lower time frame for more details. And what you can obviously see is we started this bullish run September last month after we had a decline. We started the bullish run on the dollar index, pushed all the way up, broke through all the key levels that we had mapped out. And like I always tell you guys, the market tends to move like a magnet. We pushed up, came back to make a retest at this previous resistance. As you can see here, I'm just going to extend that so that it becomes a bit more visible for you guys. You see, we created this resistance here and traded below it, and now we've broken above it. There was a little drama at that resistance, but the market came back down to find support there. And what happened? We had a bounce to the top side, still danced around this previous resistance that I have up here. I'm going to extend it for you guys to see as well. And that's why it's important for you to understand key levels. Now we've seen that we're bullish. We were bullish last month. We're still bullish this month. And we're now looking at some of the important key levels that the dollar index is retesting. And if you notice, this is one huge spike. Usually this spike happens when there is a high impact event. And as for yesterday, it was due to the result of the election. We had that spike, after the announcement of Trump winning the election, Donald Trump, we had the spike to the upside. And what happens when you have an impulsive move like that? What happens is the market starts to slow down a bit or make some pullbacks, right? And that's why you don't let just one candlestick determine the trend, right? The trend is made up of multiple candlesticks and multiple chart patterns. Okay, so when you see higher highs and higher lows, that's what I mean by multiple candlesticks, multiple patterns. When you have series of higher highs and higher lows, then that can form an uptrend. One candlestick doesn't form a trend. Okay, and usually when you have a high move like this, we get a pullback or a consolidation, and either a continuation or a reversal. But currently we're getting a reversal to the downside, which I still think the dollar index would continue to move up and potentially retest 106 psych level before we get more drama to the downside or a potential break above to make a retest at these levels, right? So 106 psych level is still in view for the dollar index. I mean, we're having a pullback right now, but this is still positive for me. 106 psych level as a potential area of interest and point of retest for the dollar index. So I'm just going to indicate that right now. But like I said, guys, in an hour, 30 minutes, there'll be speeches from the president or the governor of the central bank, the Federal Reserve in the US. So most of these speeches bring about their stance on monetary policy, stance on interest rate decisions. And these are the things that would also drive this market either to the upside, or we're going to see some consolidations around here. But 106 level is still in view for the dollar index, and that's what I'll be expecting. That's the area I'll be expecting a retest for the dollar from next week. So if you're trading pairs like GBPUSD, EURUSD, obviously now, if I go to the GBPUSD chart, you'd see a bullish candlestick as the most recent candlestick. Like I said, you can see it here. But it doesn't mean that, we're going to see continuous uptrend in the pound dollar market. This is just temporary for me. That's what I think. That's what I'm seeing here in the dollar index, because we're coming down from a bearish move. Obviously, we're going to respect these levels unless we have a huge or high impact event from either the dollar or the pounds that can take this market all the way up. I'm still seeing the dollar index, the pound dollar market trade below 1.3 psych levels in the coming weeks. So I'm just going to indicate that for you guys as well. And if you notice, we're coming from what we can call an uptrend. As you can see, we've been trending to the top side. This can also be an area of potential retest. If we get that retest here and a pullback, then this would be a head and shoulder pattern, which is a reversal shoulder pattern, a reversal pattern on from a bullish market to a bearish market, right? So what I'm trying to say is, if we get something like this, if you get the markets pushed to this point, and then we start to see reversals around here, start to see emergence of bearish momentum candlesticks engulfing, shooting star patterns, or any doji indecisive candlestick that pops up there, then we should just be preparing for a push to the downside. And then what that would mean is we would have something like this. And the head and shoulder pattern is it's a rare pattern. I mean, most reversal patterns we get is a double top, triple top, cup and handle, all that. But we don't always get a head and shoulder pattern in the markets. But that's what this is going to be if we get a retest here and then the market begins to push back, which is what I expect, somewhere around here. They usually say they usually say the trend is a friend till it bends. And obviously, if you're going to be trading what you see and not what you think, you'd obviously see that now we've created a series of higher high, higher low, higher high, higher low. And we've created this most recent high. But what happens is the market did not create a higher low here and start to push up for another higher high. No, what happens is we broke below this previous higher low. And we've also not just broken below this previous higher low, but we failed to create a higher high. We failed to create a high that I would say takes out this high, right? And what does that mean? It keeps this area open for a retest before we get something like this. That's if we get a break above that, this left shoulder. If we get a break above that, then we'll be coming back up for this But we've kept here, this move has kept the left shoulder open for a retest and a potential move to the downside, which is what I expect to see in the pound dollar market over the coming weeks. Well, we had a session yesterday, the US election session in the Octa Nigeria Telegram chat. If you're in that chat and you participated in that session, you'd remember that we did an analysis on gold, and I think Timothy talked about the psych level 2600 as a psych level where gold will potentially make retest in the coming weeks. We're already pushing down there, and like I always tell you guys, one candlestick should not just define a trend. Okay, obviously you're seeing the market push back up and try to, you know, head to the top side, but first you have to look at a candlestick close. You have to also consider the reason or at what point that candlestick was formed, right? And in this case, we're having an impulsive move, and obviously we're going to have either a consolidation or a pullback, which we're having right now. So what we're going to do on the gold market is, if you're trading gold actively, what I would tell you to do is to wait for the next candlestick and see, because I expect the next candlestick to still push the gold market to the downside. This is a significant level for gold. I don't think we're just going to get a break and start to trade to the top side over the coming weeks. I don't know. Let me check the economic calendar and see if we have any important event. I think we have one on Friday. I think we have a speech on Friday. Okay. Consumer sentiment index, high impact. I don't expect this to bring about much volatility to the markets, to the dollar markets. But for the Canadian dollars, yes, unemployment rate is going to bring about volatility for the Canadian dollars. Let's see next week. Okay, we have CPI, we have PPI, and we have retail sales month over month. So I think these are some of the reports that would also drive the gold markets, bring about volatility for the gold market. But based on what I'm seeing on the charts right now, we've created higher highs and higher lows, and this is our most recent high on gold at 2789. Just going to indicate that. Which is an all-time high for gold. And we also have this critical level of impact for gold as well, where I expect the market to dance around for a while or even break below and trade below this zone for a while before we get another retest at this all-time high. So my bias on gold is bearish in the coming weeks, right? But if we get a break above the all-time high, that's my indication to go long extensively on gold, right? If you get a break above this all-time high, then I think we're going to trend upwards for a while. I think the next target would be the cycle level 3000, be around here. But right now, looking at the gold charts, I'm pretty bearish on gold for the coming weeks. All right, guys. EURUSD. Okay, let's look at EURUSD. And I was just, talking about reversal chart patterns, telling you guys how double tops and triple tops and double tops and double bottoms and triple bottoms are the frequently formed, chart patterns or reversal patterns. And you can see that here. This is the first top, the second top, and then we have the neckline, this green area indicated here. We had the break, the pullback, the break, and we're having another retest at this resistance, right? Obviously, we came back here for a retest, and that's why I always tell you guys, if you understand the key levels, you know what to look out for in the market. What do I mean? If we break below this level, right, and the market has to calm down, we're going to get a retest here before we come down to this point. Now, the only reason why we're going to break below this point without getting a retest or market or consolidation around this point is if there is, a high impact news or high volume, and then we come down to this point. All right. So if you understand key levels, what key levels would help you do is basically look at the left, look at the lines and the important significant levels that you've already identified on the left hand side, and you can just extend them to the right. This area of retest where the market formed a double top was an extension, right, from this one. And as you can see, the market has come back to make a retest here and push to the downside. So guys, when you go back after this session, I mean, the video is going to be on the Octa Broker YouTube channel. It's going to be here. You can come back and watch it. Just try to get familiar with, the key levels. And key levels is just basically areas of supply and demand, support and resistance. Just start from there, and then before you can start to talk about, understanding how internal and external liquidity works in the market. Okay. Guys, we'll come to the section where you get to ask me your questions. So if you have any questions, please ask your questions now in the chat. I'll be happy to answer all your questions. And while you ask your questions, I'll just quickly go over risk management tips for you, which is not often talked about in the market. And you can screenshot this. You can come back for this video. These are 11 important risk management tips that can keep you in the market, long enough to place more trades and potentially make more profits. Get an adequate knowledge of the Forex markets and its risks before you trade live. Backtest new strategies on your demo account before trading on a live account. Understand the impact of leverage. Work on your risk appetite, because obviously I hear a lot of traders say things like, how much should I risk? How much should I start with? These are things that would differ, because someone else's income may not be the same with your income size. Someone else's risk tolerance may not be the same with yours. So these are the things that you consider before you start trading and while you're executing your trades. Use a moderate position size. Set preferred stop loss and take profit levels on your trades. Choose a moderate risk to reward ratio. If you're going to be risking 5% to get 1% reward, that's not really a moderate risk to reward ratio now, is it? Use a trailing stop on your trades to protect your profits. Control your emotions. Do not overtrade or revenge trade. Know when to stop after consecutive wins, and never risk more than you can afford to lose 2% or less per trade. Now, I know a lot of traders always talk about how using a moderate lot size and risking little will not give them the money they want. Now, the idea for using a moderate risk to reward ratio and using, applying proper risk management is not to, the idea about that is just so that you can understand how to manage your risk. And when you understand how to manage your risk, you can start to decide, this is how much I'm comfortable with risking. This is how confident I am. The idea is to build confidence. Okay, that's just the idea. It's to build confidence. It's like, when you start to ride the bicycle for the first time, then you have all your gears on, your chains, everything, just to protect you from falling. And at some point, you get confident, right? And you may not need all that anymore. Maybe just the helmet, So if you're starting, risk management is key. It's very important for you. And in the long run, you can want to tweak it and adjust it to however fits you. That's fine. But the idea is to stay in the market long enough to place more trades and make more profit. If you come into the market and you don't define your risk and you just blow your account, 100% gone, boom, what happens? You may decide to come back again, but you will be coming back with a low and reduced morale. You won't come back with confidence anymore, because now you're coming back to start from zero, right? But if that day you risked 2%, at maximum 5%, you still have 95% to go on. And it's going to take you a long time to just take out all the 95% if you keep, making mistakes in the Forex market. And like I said, the idea is to stay in the market, stay in the business long enough to place more trades and make more profit. Now, if you don't already, you can download the Octa trading app by using the link in the description. Octa offers a wide range of trading instruments with low spreads, fast execution, and zero commissions. We also have various educational resources like the one you're watching right now and a lot more on the app. We have an amazing educational section right now. It's in the app. When you just open your app and you go to space, it's right above there. Educational resources. You can get familiar and get equipped, with the information you need to get super, super, super confident in the trading world. 24/7 customer support and a strong commitment to funds and data security. Now, if you made it this far, congratulations and also thank you. Now you get an amazing promo code that gives you a 100% bonus on your deposit. The promo code is Ambrose E100. That's the promo code. You can use this promo code when you want to make a deposit, or if you've already made a deposit and you want to apply the promo code, you just navigate to the promo code section. It's in the navigation button, and you click on promo code and type in Ambrose E100 and you get the promo code. Remember that there's a certain volume you need to trade before you can withdraw your promo code to your account or your bank account if you please, right? So make a deposit and enjoy your bonus. Now, summary for today. We discussed the zone trading strategy. I also showed you guys, how it works on the live chart. And we talked about some of the trading principles and risk management tips that can keep you in the business long enough to become extremely profitable if you're just starting. And some of these tips would also keep you profitable in the Forex market if you've started already. So key takeaways. We analyze the instruments and talk to you guys on how they behave under various market conditions, continuation patterns, reversal patterns. What you can also do is to review your actions, right? Like I said, when you get back after this session, always come back to this video, you watch the videos that are here on the Octa Broker YouTube channel, because if you don't reflect what worked well and also what you need to stop doing, you can't improve, right? Keep up with latest market news and updates. You get these updates on the Octa Trading app. If you haven't already, you can download it with the link in the description, and also the Octa Economic Calendar as well. You can use educational resources like this live trading sessions and other webinars, other amazing webinars by other super, super good speakers in the Octa Broker YouTube channel to enhance your knowledge of trading strategies and tools in the Forex market. Let's see if you guys have any questions for me. I might have to ask you guys some questions if you don't have any questions for me. Okay, I think I'm just gonna ask you guys one question, and you guys can let me know in the chat. What challenges are you facing in the market right now, and how are you overcoming them? Let me know in the chat. You can just name one, maybe a most recent one or the one that is difficult to overcome. What challenges are you facing right now in the Forex market? Let me know in the chat. Hello, sir. Can you please share your analysis on BTC, how it will be impacted with the upcoming news? Well, I think it has already been impacted. BTC is trading at 75,000. It should have dropped a little by now. Let's see what it's trading at right now. It's good BTC. Okay, wow, it's 76, which is Bitcoin's all-time high. And like I said, it's already been impacted. We had this huge spike after the announcement of Trump's victory in the just concluded the US elections, and ever since we've seen the market trade up and push up. But like I said, after impulsive moves like this, after these big moves, we get pullbacks. So now might not be a great time to hop on this buy. I think you can hop on the buys where you get a pullback, and the significant zones that I think Bitcoin will pull back to these zones, this area, this key level that we have here created at around 74,000. So this is where I think we're going to get a pullback on Bitcoin in the coming weeks. Yeah, so when I see rejections from this level, then I want to start to look out for buy momentum candlesticks, bullish momentum candlesticks, and still continue to the top side. But I think Bitcoin is going to be bullish for for a while. it's going to be bullish for a while. I think we're going to trade above 70,000 for a while. Probably through the end of the year, because I mean, Trump is pro crypto. He's, compared to Kamala, he's pro crypto. So I think we're going to see Bitcoin trade above 70,000 for a while. Okay. Guys, I'm not getting any more questions, so I'm just going to go ahead and end the stream. It's been an amazing session with every one of you. I believe that you guys understood not just how to use the economic calendar, but how to combine that with technical analysis for good and well comfortable trading decisions. I'll leave you guys with this. If you're trading the Forex markets, regardless of your level of trading experience, you have to maintain a positive mindset. Your attitude towards trading can greatly influence your performance and your entire trading career. Celebrate your successes, no matter how small. Each profit, each win is a step to achieving bigger profits and bigger goals. Thank you guys so much for joining this session today. I'll see you guys in the next one. Bye, everyone.